Hello everyone and welcome to another episode of Idiot Investor. I'm your host, Justin Alexander, and today I wanted to go over some growth stocks that I've been looking at. It's been a while since I've done a video, but the market's just been going up and up, and sometimes it's fun to just let it. We're up a good 27% this year. We had 70 new all-time highs, which is higher than some decades. In the 2000s, there was less than 70 new highs. I think in the 1970s, there was less than that. So we've had a ridiculous year. One of the best years in the market. So we should all feel grateful, and we'll want to somewhat keep this going as much as we can. You can't expect this forever, but you want good returns. But some of the growth stocks that I'm looking at, some of these I've bought in recently. Fiverr, it's taking a big whack this year, down 42%. I'm thinking on the chart, it's finally getting to a nice little equilibrium point. It could just keep trailing this area for a while, but I think it's a decent price. I'd like to get under 100, but I don't want it to fall under 100. So I bought it at 111. You guys might know this from PewDiePie. Made a video using this, and just seems like a really good idea where people can pay other people to do a task. Make something for them, do something in a different country. So seems like a pretty good, just a good idea. I don't even know what their finances are like. I know they don't pay a dividend. That's number one. International e-commerce type thing. Next one is Amazon. It's been trading flat for the last year, only up 4% versus the market's 30 almost. So I think when you see a good stock like that, Amazon, Google, maybe even Facebook, if they're trading flat for a year, it's building up steam. It's making a nice little base. At 3,000, it's probably not going to break that, even if we have a recession or something. So if you look at during 2020 in March, it did the same kind of thing. It held 1,600. So it's trying to hold support. I think Google might be a better example of that. So I think it held like $1,000. Yeah. During March, it would not go lower than $1,000, so that really lowered the downside on it, and then it's had a massive upside. So I think when you see a stock trading like that, trading flat, it's a good time to get in. You're paying the same price everyone has for the last year, so I think it's probably just going to slowly go up, or usually what happens is it quickly goes up in a short period of time and then kind of trails off for a while. So I think we've trailed off for a while. It's time for it to rise again. That's Amazon. One that's just been getting whacked and fell below that trading range. Square and even PayPal are kind of in the same boat. I even bought ARC-F Financial a while ago, and that one's doing the same thing. Because its top 10 holdings are Block, Coinbase, Shopify. So it used to be Block and PayPal, a little different. I do like these holdings, but at 0.75 expense ratio, you'd be better off buying the stocks in there. So yeah, I'm not too happy with how the ARC-F is done. I knew I shouldn't have got in, but you think, oh, it's just gonna keep going up forever. But yeah, Square, let's see what kind of PE, 150 and 45. So relatively speaking, looks like PayPal, but Square has a much smaller market cap. So I would say both are a good option. They both don't pay a dividend, but we're talking growth stocks. I do like these other ones here. I want Nvidia, but I tried getting in at 169 and it just didn't happen. Now it's exploded after it split. Another piece of advice is to just buy the stock as soon as it splits, because if I did, it would have been like 225 and now it's like 325. So that's what I did with Apple as soon as it split, and that's higher now than it was then. So, you know, especially in a bull market like this, if they're trying to do bullshit like that, like splitting, you know, if Google or Amazon does it, just buy it and then buy more if it goes down. Next one up is Chewy. I think this one's been whacked way too hard. I think their earnings have gone down a bit since the pandemic. You know, they're not up to profitable, but you know, everybody knows Chewy. I think it's becoming more of a household name. And that's one of those stocks that I actually use and enjoy. So I don't mind holding them, and I know they're gonna hopefully keep being as good as they have been. They've only been public for a pretty short amount of time. Yeah, that's kind of the growth stocks I want to talk about. You know, we have some more time, so maybe I'll go over a couple more. You know, I'm eyeballing Shopify. I'd like to get that at around $1,000. So if it really dips down, and it'll probably hold that area, that $800 to $1,000. And you know, read that up. I think it's probably going past 2,000. So, damn, 3,000%. That's wild. This is one that I should have bought. Another good piece of advice is to, if you see something new introduced into your world, or you know, it's like a paid service or something. My bosses started using Shopify as the POS, and it's like $35 a month that they have to pay to Shopify. So it's obviously a good business model. And you know, when you see something new and cutting edge, you know, maybe just put a little bit in there. That's what I try and do. One that's done really well, and I wouldn't really suggest going after it's done so well, but you know, maybe it's still early and you still want to get into the clean energy area. This is the world's largest lithium miner. You know, batteries need to get better. Everyone's switching over to electric vehicles, and just mainly my idea was that batteries need to get better. That, you know, the largest piece in your phone or like an electronic is the battery. Everything else, you know, those microchips are 2 nanometers long, and so if we can get those batteries stronger and smaller, that's going to be huge. And you know, lithium seems to be the material to use for those, so that's a good one. It does pay a little dividend. The other one in that vein I would suggest is SQM. I think that's more of an international, but they are one of the larger lithium miners, among other things. Obviously Nvidia, that one's gone up so much it's hard to suggest. AMD kind of in the same area, they're up ridiculous. But if you bought AMD anytime in the past, it's been a good purchase, so maybe that'll just continue. Another one that's not really growth, probably more of a value, but Best Buy. You know, if you see, it's been trading flat for the last year. It went up bigly and then it fell hard. So I think that was a good opportunity to get in. You know, just kind of just going along, cruising. Pays a nice little dividend, low PE, so I like that one right now. Best Buy's not going anywhere. You know, what they sell is only going to get better and more expensive, so you know, this one's kind of value. This one's been trading flat. This one's actually underperforming, pays a nice little dividend. You know, it's one of the largest components in the healthcare ETF. That's kind of what I look at. If you know, if it's good stock, it might be in those sector top 10s. Another growth one I bought that, you know, is questionable is CRISPR. It's down 50% right now from its highs. So, you know, if you look classically, it kind of follows that pattern, goes up and down, but it's still crushing the market. So, and this one is just such a unique company. You know, there's nobody else that does like what they do. So I'm hoping that, given that kind of advantage, that they'll perform well. Just in general, right now I've bought in VTI. I think, you know, this should be the bedrock of your portfolio. VU, VTI, VT. Those are the ones you should really focus on at the start. Make sure you have a good base of that. Make sure you're, you know, at least following the market, doing as well as the market is, and that will help. You know, it's up bigly. This one, you know, it holds the same top 10 as VU, but it also has those lower small cap that, you know, just adds more diversity, and it's still a low expense ratio, 0.03, same as VU. But you just get more diversity with actually lower share price as well, so I can buy more shares and I don't have to do one of these and one, you know, smaller ETF. So yeah, this is kind of what I look at on a normal day. Let's look at, you know, VU, the growth value, the total, the world, gold miners. These are more specific, you know, dividend and tech. One that I like, international stock that, you know, maybe call it a growth stock. It's underperforming, so. But it's clean energy stock, let's call it that. Pays a nice fat dividend. I think it's technically a utility. It's losing money, unfortunately. But it seems to be doing pretty well. It hasn't tanked or anything one day, so this is one I like. It's an international one from London. Next Era, that one's been crushing it. That one's probably one of the best clean energies you can get out there. Just American utility, all about clean energy. They're the largest, so they're going to continue to be the largest. You know, the Amazon of South America, Mercado Libre. It's one I would suggest strongly. Even right now, it's probably got a good price right now. And another one of Amazon of Berlin. I don't know, I think they do business elsewhere. I thought it was out of Africa. Germany. Anyway. Yeah, that one down 70%. I think at about $10, this thing's a pretty good deal. I think it might hold that, and the low was $2, so pretty risky with this one, but kind of in the same vein of Amazon and JMIA, this might be, or Mercado Libre, that might be a good one. And Baba, that one's been getting crushed. I think that one's a pretty good deal. I think it's still the largest company in China, so, you know, it's only going to continue to dominate in that way. So yeah, those are the kind of growth stocks I'm looking for, the non-dividend payers. You know, I got the dividend payers in the background, and the ETFs just chugging along. I've even bought some Bitcoin, so pretty well diversified. Like where I'm at right now, and I just want to share some advice. If you guys have any suggestions or comments, leave it in the bottom there, and hope you guys have a great year. All right, bye-bye.